Hey everybody, it's Adrian's Dunchik, CMT Chart and Market Technician, Crypto Burp, talking to you on this very fresh opener episode of 2024 of the Nest Show podcast. This is always a great opportunity to speak to incredible legends, to people that I always look up to very great professionals. And well, today is no different because I'm joined by the one and only person who created a tool that so many of you actually happen to know if you are good traders, because we're going to be talking about the AVWAP and the actual very originator, the very idea creator, Brian Shannon, CMT, that is known also on Twitter under at Alpha Trends. And for those who might not know about Brian, that's going to be quite a big miss, which is something that I encourage everybody again to go ahead and already check out and hit the follow button on Brian's account, because Brian is a great trader, author of technical analysis using multiple time frames, which is linked right there to the Amazon excellent books right there put by Brian. And well, there had been some great book releases lately, and all that coming from this absolute legend, Brian Shannon, CMT. Brian, how are you doing? Thank you for joining on the show.
Adrian, thanks for having me on. We missed it a couple months ago, but here we are today. Happy New Year. Honored to be on your show.
That's excellent. And well, there's such an excellent opportunity to speak to you, right, Brian, because we've just kicked off 2024. And for those who actually, can tell, there's going to be some great pieces of the presentation that Brian prepared that we're going to be able to touch upon as we go into the show. However, what matters the most is, I think, that many people find inspiring is hearing the story, is hearing the origins for such an absolute legend that you are. So what's the story behind Brian Shannon, CMT? What's the story?
Well, I don't think he's much of a legend, but thank you for the kind words. I got interested in the stock market a long time ago. I mean, when I was 13, 14 years old. And that was, I'm 56 now, so a long time ago.
No way.
And
No way. You look too good, man.
yeah, 1967. So my dad used to watch Wall Street Week, and I would just kind of hang out with him on a Friday night and, watch it. I kind of got a little bit interested, thinking, what is this stock market thing? And, eventually came up with an idea that I had seen on the news about this company called LoJack, and with, how they were retrieving stolen vehicles. So I said to my dad, hey, I've got some money saved up. I want to buy $500 worth of this stock with my, money from caddying and newspaper routes and selling gum at school and all the things you did when you were a kid to make money. So he said, okay, we'll buy 1,000 shares. It's $5 a share. And he gave me basically 10-to-1 leverage. I didn't realize it at the time. Anyway, so we bought 1,000 shares at $5. It went to $10 in about 3 months. And I think I was 14 or 15 years old, and I just made $5,000. We never discussed what would happen if it went down. So fortunately, it went up, it doubled, and here I am at a young age, just made $5,000. I felt like, I'm going to be the richest person on the planet one day. So that got me really hooked. That was my needle in the arm moment, if you will. So, after, during college, I really didn't know what I wanted to do. After college, I said, I'll be a stockbroker. And little did I realize that was, a glorified telemarketing position. Being a stockbroker. But, my passion was the market. I really was involved in it. So that's how I got to the market, first as a broker. And I left the brokerage business in 1993 to become a full-time trader for a company in New York called Generic Trading. The idea was there, you put up $25,000 and they'll give you up to 20-to-1 leverage. So, prop deal, basically. And, I was scared to death to lose money, which was a great thing. And I was making money. I made money consistently pretty much every month. And then I opened a day trading office in Denver, started to create a course about technical analysis and what I knew. So, the book, actually, I'll go there. The book that really got me hooked on technical analysis was Secrets for Profiting in Bull and Bear Markets by Stan Weinstein. I read that book, and that was my aha technical analysis moment where this just clicked. It made it so simple to really understand, what's really happening in the market and what matters most, which is price action. So, fast forward, had a hedge fund for a little while, ran a prop trading desk. And about 15 years ago, I started Alpha Trends, just kind of as a hobby, really, um, to provide ideas for people, keep my work fresh, and doing YouTube videos. Since before it was YouTube, it was Google Video first before they acquired YouTube. And here I am today, kind of doing the same thing, just a little bit more evolved. But the basic premise of what I do really hasn't changed a whole lot, which is really surprising to a lot of people.
Oh man, you're a great speaker. Like you should they should get you on some radio show, man, to get you some radio sessions, and you could easily just get so many people up there hyped about trading mainstream. So great, excellent experience. Like I could never ever in my life say that you are from the 1967. That's my father's age, actually. So it's quite a nice coincidence. However, would you tell me more about Alpha Trends? Would you tell me a little bit more about that?
Sure. So I worked at a company called MarketWise, and MarketWise was a firm that's where I ran the prop trading desk, and I provided education there as well. So I created some courses and that sort of thing, and they kind of just devolved, wrapped up their operations. And I was thinking, well, what do I do now? Well, I really like talking about the market, writing about the market. So I started Alpha Trends, like I said, kind of as a hobby. And that got the attention of Howard Lindzen at StockTwits. And he had, prior to StockTwits, it was Wallstrip. He had a company called Wallstrip, which was acquired he'd do a little skit basically about a company each day. It was, he did it in a comedic type of approach. But with value about it. And he approached me and said, "Hey, I like what you're doing. Do you want to do some technical analysis for us? 2 to 3 minute video of each of these stocks that we talk about." I said, "Sure." So did that. He started then StockTwits and approached me and said, "Brian, do you want, you're doing these videos on YouTube and you're getting, 5,000 views each video you do. Have you thought about monetizing this?" And I said, "Well, I've kind of thought about it, but I don't want to do all that back end stuff. I don't want to run a website. I want to, look at the market and do what I do." And he said, "No problem. We'll take care of all that. You just continue to do what you do, and we'll run the subscription for you." So that's kind of how it evolved. It really wasn't a lot of forethought. I always kind of thought maybe I'll do something with this. So Alpha Trends today is, it's a swing trade service. My goals there are to help people make money, to educate them, really importantly, so they can understand the process and hopefully evolve and go on and do their own thing afterwards. But to provide education and to help them avoid losing money, which I think in 2024, here it is, the 4th of the month, third trading day, we've been straight down. That has been where my talents shine right now, by not letting people buy. I can't control them, but suggesting strongly, don't buy the dip. That's one of my mantras: buy strength after the dip. So that's what Alpha Trends is today. So I provide swing trade ideas, outline the logic for them, where the stops will go, all that sort of thing, and then I provide a lot of free stuff on Twitter, as you mentioned, as well.
Right on. I mean, there is, I perfectly agree that the educational part right here is extremely essential and extremely important, because there's so few of it, right? That you and I both know that as the technicians, that is very difficult. It's always been very difficult to reach out and find credible information, right? There's so much
That's the
noise.
key
There's
right there. Yeah. Yeah.
so many self-proclaimed experts, those fake gurus and scammers who are just literally, going to promise some overnight gains. It's ridiculous. And someone who comes in new to the space, they're quite desperate to learn from anybody they meet, right? And that's the actual reason, for why CMT as an accreditation is so important, right? So how do you go about the CMT accreditation? How did it happen for you?
Well, it's funny. So I wrote my first book in, was it 15, 16 years ago, 2008. And after I wrote that book, is technical analysis using multiple time frames. I saw my friend JC had just gotten his CMT, and I started asking him about that. And I was like, well, I don't want to take all these tests and go through all this stuff. So I wrote a letter to someone at the CMT and said, hey, would you guys consider giving me an honorary CMT? Here's my work, here's my book. This shows that I know what I'm talking about. And they're like, no, we don't do that. You've got to take the test and that. So I went through the entire process. It was a great process because I learned a lot of things that I hadn't been exposed to. Some of those things I use today, some of them I've completely ignored. I don't use Elliott wave. I'm not really into candlestick patterns, but they're good to understand the full body of knowledge of technical analysis. And a lot of people, and myself included, when I first went through the CMT materials, I was thinking, well, I'm never going to use this stuff. How is this going to help me make money for what I do? And that's not the point. The point is to expose you to the different ways, because there's so many ways to the finish line in technical analysis, in the market in general, that you've got to pick and choose what makes sense for you. And that kind of ties in with, or maybe this is where I really kind of came up with it, is, I always tell people, here's the way I see this trade. Here's the way I see this market. Make it your own. Don't do it because I say it's a good idea. Make it because you take the trade because you agree with it or you don't agree with it. If you don't agree with it, I don't need to hear your reasons why. That's what the market is for. The market gives me that feedback. I'm not interested in, hearing one person's individual opinion saying, well, Brian, I don't agree with you because of this or that. Fine, disagree. That's what price will tell us who's right or who's wrong. So make the trade your own. Know what your time frame is. Know what your risk tolerance is. No one should be trading exactly like anyone else does. It kind of is disheartening, I guess, to see some people who just want a stock pick and say, hey, what looks good? What should I buy now? Okay, where do you think it's going? And that's not the way the market really works. The market is sit down and figure it out for your time frame, your style, your risk tolerance. And if it doesn't make sense, you don't trade it. You don't trade it because somebody else tells you to. So I kind of think I belabored that point there for a moment. So let's continue.
Right on. Ladies and gentlemen, this is decades of experience speaking for Brian right here, right? And there are so few professional technical traders, and Brian is one of them, because trading is one thing, retaining the profitability is another thing, right? And there is an actual whole lots of reasons why we're holding up to this excellent screen share of the presentation with the alpha trends, because right in a second we're gonna actually move to the short slide check for what Brian prepared for us. However, like I said, we are holding this up on the screen because hasn't it become, Brian, that the alpha trends, that the anchored Vwap's basically is like your business card in a way?
Yeah, I'm certainly, known for it. I've helped. First, I want to make clear that I didn't invent the anchored volume weighted average price. That honor goes to Dr. Paul Levine, who did work in the late 90s on it. But his work kind of died off a little bit, and it really wasn't known. I kind of independently stumbled into some of it without realizing his work was out there. But I breathed life into it. I brought it to TC 2000 first in 2015. Prior to that, it really wasn't available on any trading platform, the anchored volume weighted average price, as a point and click study. So once I started using it and showing it in my videos, it kind of took hold. I started educating people on it. TrendSpider then got it. Stock Charts got the anchored Vwap, and a host of other softwares, TradingView included, have the anchored Vwap as a point and click tool that makes it something that anyone can use. So that's really my role, is breathing life into it and, resurrecting it from the dead, I guess, and bringing it to the masses, because I found so much value in it in my work. When I first discovered, I would look at a chart and go, wait a minute, why is it bouncing there? And I look at a VWAP and I look at it and just have these moments where I just say, holy shit, how can this be possible again? Right at that level, what is going on? So I tried to find information. There wasn't really a lot out there. There were a couple of white papers that were all scientific and difficult for me to really grasp. I wanted to get to the nitty gritty. How do we make money with this? And that's where I've helped people, I think, is to say, here are specific strategies. Here's the psychology of why it works. It's supply and demand measured absolute 100% objectively, and to help them make money with it, and define risk, and manage their trades.
Oh man, that's so well explained, and that comes from the life briefer, Prophet Brian, as you referred you referred to yourself, which is quite a big dose of I should say, giving credit to the past, technicians as well, right? There's certainly a lot of people. There are certainly a lot of people, who paved the way. However, at the end of the day, you did manage. Like I heard about the Anchor Vwap's because of you. That
Mhm.
is something that gives a lot of credit, and a lot of, like I said, a lot of reliability for everybody to rely on your incredible works, right? And just right before we get to the very presentation, like if you were to briefly explain why should anyone care about technical analysis, what's that going to be?
Well, here's a phrase I'm known for: only price pays. And that means we can look at fundamentals, balance sheets, interview the CEO, do whatever you want to determine what that company is, and maybe they're going to be more profitable one day down the road. But the only truth in the market is price action. You cannot argue with it. I mean, you can argue with it and say, I think it's going to be worth more in the future, but it'll tell you, what's this stock worth? Well, what's the bid right there? If you want to sell it, that's what it's worth right here, right now. If you think it's some other price, well, then you're going to have to wait for that. But only price pays, because technical analysis shows us all of the information in the market at once. The market's known as a discounting mechanism. It discounts what's already known, and it anticipates what's going to be in the future. So the market is always trading on forward expectations. That's why the market rallies before the Federal Reserve starts cutting rates, because the message is they're going to be cutting interest rates, and the market knew that before the Fed ever even breathed a word of it. The market was anticipating that because they saw the signs that here's where the economy is headed. Here's what's most likely. So we're going to start to bet on that now. That's why we often see, buy the rumor, sell the news. Maybe we're going to continue to rally right up until the first interest rate cut. And the first interest rate cut, the uninformed people who've been on the sideline waiting for the Fed to act will get involved. And guess what? They're going to get sold to by the people who've been anticipating for the 6 to 9 months before. That's why we often see buy the rumor, which is they're going to cut rates, and then sell the news. It's not a prediction, but it's certainly a definite possibility that if you understand the market discounts what's known, anticipate and trades on what's anticipated, then that puts you kind of a little bit ahead, and it's more of an anticipation game than a reactive game.
Oh man, that's so well put through, right? Because at the end of the day, you know, um, I've made plenty of mistakes. I've lost so much money, man. I've
Same.
fallen for so many scams. Make 5,000 mistakes just the moment I wake up. It's incredible. That keeps me basically down to earth, because I know how silly I am. What I know, if I were to put one thing, is that it's important to know the definitions, right? And there are so many ways at times to define, let's say, some simple things, like even the technical analysis, right? It regards to anybody, to anything. When I was doing my engineering degree, I often asked the question about the energy, right? So there are so many ways how people define the energy, or in so many ways how people would define technical analysis, that at the times there is so much noise and so much variability around those definitions that the actual meaning just distorts, and it's barely hardly visible at times, right? Which is why when I speak to such absolute legends that you are, Brian, I often ask the same question, like why technical analysis, what that is, what that means to you. And having this opportunity, I couldn't just forget but ask, how that translates to volume weighted average prices and the presentation that you've got for us.
Well, so the way it relates to anchored volume weighted average price, as we know, price is truth. So what we want to know is who's in control, buyers or sellers. And not just in general. I mean, we can look at is the price higher than the close yesterday? That's one reference point. That's what we're used to. Is it higher than, since the earnings report? And we can look at it from a net change basis and say the buyers are in control because the stock is higher. But let's say the stock gapped up 10 points and now a month later, it's only up 6 points. From that event, are the buyers still in control? Well, what the anchored volume weighted average price allows us to do is anchor to that very first point where the supply demand dynamics changed when it was up 10 points. And then we put the anchor on that and measure forward. So if we're now up 6 points and we're below the volume weighted average price from that event, it tells us with 100% conviction that sellers are in control from that point. And we can have that happen on a daily basis where the market will, let's say the SPY gaps down $3 and it closes down $2.28. Well, from the close the prior day, it was down. But from the low of the morning or where it opened, the buyers might have rushed in and gained control because we're above that daily volume weighted average price. So it tells us, again, with 100% conviction, who's in control from a certain point. And we use that to say, okay, well, as long as the sellers are in control from that big supply demand shift, that big imbalance, well, I don't have an advantage to be a buyer here because there's net sellers since that event, or there are net buyers, so I want to participate in that. So it allows us to really just objectively measure who's in control from any point.
I like that. Okay, so what we have is that price is how we keep score. Volume shows the emotional level of commitment to price movement, and time is a relative study, which is highly subjective. And then there is a quote at the bottom that cumulative average price weighted by volume as stock trades for 1 day, right? And that there's the whole crossing where the combination of time, price, and volume is basically what constitutes uncored VWAPs, right? So what's the best way for a complete beginner, for those who are just getting started, into crypto or into any other market, to using basically uncored VWAPs? Like what's the drill? Like how can we use that?
Yeah, great question. So to first start out and really where you can understand it best, I always think it's best to learn on a shorter term time frame, not necessarily trade on a short term time frame, but to learn on a short term time frame because the prices move dynamically and you can see the action. So let's say you're even looking at a 50 period moving average. Well, if you're looking at a daily chart, it only moves one period every day. So it's going to take a long time to see how that develops out in real time. If you look at a 50 period moving average on a 1 minute chart, you're going to get to see the supply and demand move around that. Well, same is true for the volume weighted average price. You can start from the daily volume weighted average price and start to see how prices react to it. Let's say the market gaps up, it pulls back a little bit, goes below the volume weighted average price for the day, and then gets back above it. That's one of my favorite moves is, chase the gap. That is, just buy it when it goes up and hope that it's going to continue to go, or wait for it to settle down, a little bit of profit taking. It gets back above that daily volume weighted average price, let's say 28 minutes into the day, and to buy there, because now we know we've experienced a little bit of a shakeout from the open, but the buyers have stepped back in, and the average price from the beginning of the day is now lower than where prices are. Prices above the volume weighted average price. So the average buyer is now making money. The average short who decided they were going to fade that gap is losing money. So the buyers are in control. It doesn't mean they're going to maintain control, but because we know they have that control, we want to participate in that trend and set our stop, let's say below the low of the day, which was at, 21 minutes into the day. So start to recognize and learn on the shorter term timeframes. Don't trade there until you really get the experience, but learn how technical analysis works, or go back and use a simulator is another way to do it. There's a lot of great simulator trading softwares to see how, if you anchor to that earnings report 32 days ago, well, in the first 3 days, maybe it chopped around it and then it got back above it. And then day 15, it was, 2 points away from it, above it. It pulled back, 3, 4, 5 days later, touched it, and then rocketed higher. Why is that? What's the psychology behind it? And that's really what I've explained in great detail in the Anchored VWAP book. But it's all about psychology. And this gives us the most objective way to understand what is going on in the market from a supply and demand standpoint. Only price pays.
Only price pays. This is gonna be something that's gonna be stuck in my mind for a long time, man. That's a great saying, and it's actually very true. It's just 3 words, and it's so true. So very very good one. So how does that translate? Do you have any case studies, any examples that you could show? Oh wow, there we go.
Yeah. So here's a good example of the difference between the VWAP, which is the volume weighted average price. The traditional VWAP is the average price weighted by volume for one day. The anchored VWAP, AVWAP, AVWAP, whatever you want to call it. Some people call it VWAP. It's all the same. The VWAP is for one day. So it starts at 9:30 a.m. Eastern time for US stocks. And that's what this vertical line is right here. So I've got a stock, I believe it's a 2-minute chart, maybe a 1-minute chart. There's the daily volume weighted average price. Well, the anchored VWAP tells us from an event. So even on a very short-term time frame, once you see here, this market was kind of just chopping around. It had a little shakeout and then rocketed higher. So from that point, something happened. There was a shift in the supply and demand. So when we look at that and we then anchor to that, you can see how it held as support right here, and then it bounced and continued real strong later in the day. So a day trader could look at that and maybe make a really nice trade here and capture this trend into the close that day. The next day, the stock opens and sellers immediately come in. We know that because the sellers are in control because the prices are below the average price adjusted for volume. It initially tried to find support at that volume weighted average price. So there might have been a trade opportunity for, again, a very short-term trader. The thing is, this is a 1-minute chart. This could represent, each one of these candles could represent 1 week, and they would look the same, and we would interpret them just the same. So it doesn't matter what the time frame is. Again, it's just easier to understand on the shorter term time frames. So we saw that level initially hold as support, and then the sellers gain control right here, just a lower low. It's below the daily VWAP. It's below the VWAP from here. What does it tell us? The average person who bought, because maybe these were Fed minutes, I don't know. The Fed minutes came out. There was a little shakeout, then it rallied. Well, anyone who bought in there was feeling pretty good about it. But on average over here, all those buyers are at a loss. So what about the short sellers who didn't believe this? Well, they're now in control, so they're going to press it. They're feeling confident. Sellers, we know with 100% conviction, are in control from this starting point. That's what we're interested in. So this is why we use it, because the price is the truth. It's the laws of supply and demand. It's 100% objective who's in control. And what we want to be aware of, what's the slope of the volume weighted average price, how far above or below we are. So when we're this far above it, does that provide us any value? No, but when it pulls back down to it, we look at it and say, here's a level of interest. The buyers might gain control. If they start to gain control, I'm going to be a buyer. I've got to be aware though, for today, so there's different, there's tides, just like Charles Dow. There's the oceanic tides, there's the waves, there's the ripples, etc. And we've got to get to that point of alignment. So they became aligned right here where the sellers were in control from the day, as well as from those Federal Reserve minutes or whatever the number, whatever happened there on that chart was. So that's why we've used these. And one of the key concepts, Adrian, that a lot of people get confused with, a lot of times you'll see that the stock will bounce perfectly from the volume weighted average price or the anchored VWAP from wherever you are. And they'll confuse that as, hey, this is a place to automatically buy just because we pulled in, similar to a simple moving average or a Fibonacci level. I call them all levels of interest. They're a place that says, here's where the buyers should come in and defend prices based on what they heard from the Fed yesterday. So I don't necessarily want to buy there, but I want to look at it and say, here's where they should defend it. Let's wait and see if there's evidence. And once it starts to bounce from that level, then I'll participate. I don't want to just blindly buy because maybe it's going to just slice right through it. We see that all the time with, the 21-day moving average that people always talk about, the 50-day moving average, the 38.2% retracement. People will say, hey, there's support there. We don't know support until after the fact. It's all about, this is a level of interest where I want to study on a shorter term time frame to look for actual evidence the buyers have gained control so that I can put on a trade and control risk with a reasonable risk reward. And it's all about supply and demand.
I love that. I love that. So the supply and demand. I like the reference that that those are laws, not theories, right? That it actually works. I couldn't agree more. Is there any reference that you wanted to make about that?
Well, so again, it's what you actually want to think about the anchored VWAP is very similar to a dollar cost average. If you were to buy $1,000 worth of Apple each month for a year, well, your first month you're going to buy, I can't see the numbers here. It's at 153. It looks like, so you're going to buy 6.53 shares. Well, when the stock price is at the end of it at 265, well, you're only going to buy 3.76 shares. This blue line, this purple line rather. So this blue is the stock price, and the inversion of that is the number of shares. The higher the price is, the less your $1,000 is going to get you. So at the end of the year, this smoother line, that's basically your volume weighted average price that you purchased. So that's how it emerges. So when the price is up here at 265, then your average price is 201. That's what dollar cost averaging is. This is your volume weighted average price for Apple. And the way to think about it in terms of, the average, we have simple moving averages, we have exponential moving averages, and the volume weighted average price is represented as a moving average. It's cumulative. So the starting point remains static, unlike traditional moving averages where the new data, the old data drops off and is replaced with new data. The old data still says it stays there. It's a cumulative average that is continuing to tell us here's the dollar average price that this stock has traded at since an event. Since the beginning of our measurement point.
That makes sense. May I ask you one silly question?
Yeah.
There is this green guy in the middle, surrounded by the other guys. What's that reference?
What was the reference? That isn't.
There must be some wise reference.
No one's ever asked me that. I think it was just. I think I was just trying to put a graphic on there, and it might not have actually made sense. So.
Oh man, listen. I mean, we are skewed. We are biased. We are, in crypto, we like everything that's green, right? Because that means money. So I'll hold on to this point. Still, I perfectly agree. The cumulative, approach right there rather than drop off is something that is unique and different about the volume weighted average prices overall. And the thing that you use, the anchoring point, of the typical reversals. Right away, is that going to be the reversal days that you anchor that in, or is there going to be some other typical events that you have on your framework?
Yeah, I mean, if we move forward, I've got some key anchor points, and so it will act as support and resistance is what we want to look at it for. So again, kind of similar to what I was talking about earlier. On the left, we see a chart just with price action. On the right, with the volume weighted average price. Do we want to buy when the stock gaps up right here? Oops. Um, and the answer to me is no. We want to let it settle down because maybe it's going to fail. Maybe it was going to continue down. We don't know. But if we wait for it to get back above that volume weighted average price, that's where it says the buyers are back in control. So I want to be a buyer right there with my stop underneath 0.2, which is the low of the day. It rallies up, maybe takes some off, it pulls back down. Do you want to be a buyer right there? You can look at this and say, yeah, I would have loved to buy there because that was the low and it bounced. But I want to buy right here as it's bouncing from that level. And then I can put my stop underneath that 0.4. I don't want to buy it at 0.5. I want to buy over here as it's rallying away from there and set my stop below it. So these are, how we want to use them as support and resistance, and where we want to, anchor is right here. So high volume events, right? So you said reversals. We don't know a reversal until really after the fact, right? So and the value is we don't have to necessarily anchor on that particular day, like right here on 0.3. We could anchor over here as it breaks down below that low and say that was definitely important. And then, or you could say, hey, I want to short it as it breaks back below that volume weighted average price with my stop above there. But notice how there's resistance at that. It gets defended. And same thing over here. So I will anchor to gaps are really one of the best places to anchor from. And of course, you're not going to get this in crypto because you don't really have gaps because they're trading 24 hours. So, but with equities, when we have those things, or for instance, from a big gap, it might be an earnings report, it might be the Federal Reserve announcement. So as soon as on a 1 minute chart, I'll put an anchor on and say, okay, I don't want to be involved maybe in those first 10 minutes. But as it pulls back to that VWAP and starts rallying again, I'll absolutely buy right here with a stop under there. Or as it starts to crisscross above and below, it's saying now there's indecision. It's a tug of war. From that event, we knew the buyers were in control because we were above it and it was rising, but now it's crossing back and forth above and below. If it breaks the lower low below that low right over in here, well, then I want to short it with a stop up over here somewhere because I know with 100% certainty the sellers have regained control. They wrestled it away. It was a knife fight in that area, but now the sellers are in control. I don't want to think, hey, the market's dumb. I want to fight this. I want to go with the trend. And even several days later, you'll see that the Federal Reserve announcement anchor will continue to be important from significant highs and lows, earnings reports. These are the key places to anchor from. And, if you look at an anchor from an IPO is one of my favorites. You'll look at okay, so today's January 4th. If you were to take a look at DraftKings and go back to their IPO day, you'll see that it's touching it today. It had previously been resistance, and now today, maybe it's starting, it's a level of interest that tells me, okay, we've seen a pretty good pullback in DraftKings. Now maybe this is a place where it's going to find buyers, so I want to study it carefully in here. And that's the key thing, Adrian, is it's like I said, it's just like a moving average. It's just like Fibonacci. It's a level of interest. It's a reason to look at the stock and say, are the buyers or sellers gaining control? In Ethereum right now, we've been battling with the anchored VWAP from the 2021 high or May of 2021. We've been battling that for the last 6 weeks. It can't get through that. Once it definitively clears that, then I think you're going to see a move, from 2,300 up to 3,000 pretty quickly.
And all of a sudden, watch how many crypto folks just flood to follow you on Twitter for that. Oh man, I couldn't agree more, right? And that's quite a magic, right? Because, well, magic, this magical thinking in technical analysis at times is all that we need, as a matter of fact, right? Because some of the prophecies just fulfill themselves, right?
Yeah.
They're self-fulfilling to an extent. Uh, though what I've, like I mentioned before, I'd been using AVWAPs, for quite a long time. Uh, at one times more frequently than the others. However, I came to realize how valuable of a tool that was, even before I got to know you, Brian, which is quite a
Mhm.
big enigma to me, a mystery. Still, what I love to hear, if I were a complete beginner and a newcomer, let's say, if you were to recommend from your own life briefer viewpoint, the best free practices, something that people can apply to their trading like immediately. What's the top three practices that you would see feasible?
I would say, learn to anchor from key events, number one. And actually, prior to that, I would say understand why they have the potential to become support and resistance, and that it's not an automatic buy spot. It might look like an automatic buy spot in hindsight, but you're going to see, movement around there. So if the stock is at 26, it might, the VWAP, it goes from 29 down to 26. The VWAP is at 26. It might pull back down to 25.10 and then, close right on the VWAP. And it might look like, oh, I should have bought the VWAP, but you had to experience 90 cents of pullback, of sheer terror when you bought it at 26, and it continues to go lower. And at that point, when you're down 90 cents in the first 30 minutes, you're looking at this going, wow, this VWAP is stupid. Why am I using this? Well, you're using it incorrectly. It's a level of interest. So use it as a potential level of support or resistance, and you want to learn where. So that's the key, is one, their potential support and resistance levels. I go into great detail about why that is. It's based around institutional orders, but then know where to anchor from. The key anchor points are IPOs, earnings reports, significant highs and lows, and you'll learn to recognize those and play around with them. And the third thing is time-based. So for instance, this morning, third trading day of the year, the S&P 500 yesterday afternoon experienced a small rally. It ran where? Right to the year-to-date anchored VWAP. We're only 3 days in, but right to it, and then it sold off. This morning, we saw a rally, and it rallied right to that anchored VWAP from the beginning of the year. And now here we are near the lows of the day. It's not a coincidence. So there are support and resistance is what you want to understand, is number one, I would say. Two, where to anchor. You have events such as highs, lows, earnings, IPOs, and then you have time-based anchors. So you have daily VWAP, you have the week to date, month to date, year to date. Those are some of the ones to look at. So those would be the top three, Adrian.
Love it, love it, and that's quite a thorough and well thought through workshop. Even though it's all been happening in another 40 minutes or so, so it's super impressive, Brian. Thanks for sharing that
Good.
so far. And what I love to hear is like you rightly mentioned, it's just barely the fourth day of the year. It's a third trading day, if you will,
Yep.
right? And there had been some comments regarding the failed Santa Claus rally. My good friend Jeff Hirsch, whom I wrote this Bitcoin seasonality article
Yeah.
with, he often speaks of this, this January trifecta. Speaking of the Santa Claus rally, that if the Santa Claus rally doesn't really deliver, perhaps it's a little bit wobbly situation. Like, with that all in stance, from your, again, I'm gonna anchor to it, life briefer viewpoint, as this very great, excellent professional that you are. What's the 2024 outlook, man? Like, what do you expect this year to happen?
Here's where the question isn't really a question for me. And the reason is my time frame isn't December 31st of 2024. I'm a swing trader. So I take it in bite-sized pieces. Right now, the sellers are in control. As far as I'm concerned, we're in a bearish environment 3 days in. Doesn't mean we're in a bear market, but the environment does not favor buying stocks right now. So I'm not going to be a buyer. Now, in 3 days, we might have started to bottom tomorrow, we turn sideways for a day or two, a little shakeout to the downside, and then we start to rally. Well, I'm going to be a buyer. I'm going to hold those stocks until that pattern of higher highs and higher lows with a 5-day moving average is interrupted. Then I'm going to move to the sidelines. So it's not a question for me because that's not my time frame. And I'm not, overall, I will say though, we're in longer term uptrends. We're above the rising 50, 100, 150, and 200-day moving average. As long as we're above a rising 200-day moving average, I think you have to give the benefit of the doubt to the buyers. So it's not going to turn on a dime into a bear market. Right now, I would say I have a bullish bias for the year, but right now, 3 days in, I don't want to buy anything. So that's not really much of an answer, but it's the honest way that I trade.
Got it. So you don't really regard much the longer term trends since they are not really outside of your scope of focus. Is that correct?
Well, so for instance, I'm bullish overall, but there's, it's multiple time frame analysis, and what I'm looking for is trend alignment. So the longer term trend, on a weekly chart, it's innocent till proven guilty. Buyers are in control, but shorter term, the sellers are in control. I want to wait, so I want to give the benefit of the doubt overall to the buyers, but I'm not going to just rush in there and buy stuff because I think it's a value. What if it does continue lower? I'm more interested in protecting myself and waiting. I don't want to catch the low of this move. I have no idea where it's going to bottom. I don't, I look at levels of interest and say maybe it finds buyers at the 38.2% retracement of this because that's where the VWAP from that level is, and that's where the 21 period moving average, whatever. So overall, I'm bullish, but not right now. And that will change 50 to 100 times during the year. So I just don't want to buy stuff in downtrends. I don't want to short stuff in uptrends. It's all about, risk management first and foremost, rather than trying to be right and make a call for what I think the market's going to do in 2024. If I had to guess, I'd say, I'll say what everyone says. It'll be up 10 to 15%. As Linda Bradford Rashke says, one of my favorite quotes is, the markets will do the most obvious thing in the least obvious way. It might be up 13.8% on December 31st of this year, but we might rally 30%, drop 18%. And if you're buying during that down 18, or if you bought at the top of that peak and you experience it down 18%, well, you're hating the stock market and you probably puke it at the bottom and you don't participate in the gains. So it's all about time frame. And mine is, I have the luxury of not defining myself for the year based on where we are in January.
Oh man, that's so well put. That's so well put through. And I'm just looking to the side. S&P is over $4,700. Sorry, the gold is over 2,000 still. Silver has been lagging quite lately, 23 per ounce. Crude oil is down a little bit. Bitcoin's up a little bit. Super choppy days lately. Although, what I love about what you mentioned, Brian, is that it's the most important thing for a trader to do the thing that is right for them, right? It's not so much to disregard everything else, however, not to put forward someone else's takes, timeframes, methods, techniques, just because they use it. It's about discovering one's own basically strategy, system, time frame that fits into their lifestyle. Isn't that right?
I think you just hit the nail on the head. It comes down to time frame. That's really most important to me. Time frame and risk tolerance. I don't tolerate a lot of risk, so I don't want to buy dips. To me, every time I buy a dip, and if I buy it and it's down 2% the next day, I really feel stupid. And I really feel like, why am I buying this stuff? I just lost, I want, when I want to get involved in the market, I want confidence that the buyers are in control, that we're back above the year-to-date anchored VWAP. Maybe that will happen on January 9th. And then I'll know the buyers are back in control like they were last year. So now I can take a meaningful position. Meanwhile, while we have this pullback in a major uptrend, I'll scalp on the short side. But I know my time frame is I'm not making a commitment here to the market. I'm just trying to, I'm sitting here in front of the machine every day. I'm trying to make a little bit of money. I'm doing it with smaller share size because I don't have conviction that we're about to enter a bear market, but we're clearly in a pullback mode. So if I can see a low risk opportunity on the very short term time frame, I'll use that. My preference is to get long for the next move higher that might last 2 days to 3 weeks and then reassess.
Oh man, I love it. I love it so much, right? And more so because everybody who's just getting to know you, Brian, there are so many creators in this space. However, there are very few who are putting thrown up, the facts and the very technical, well, almost I would say scientific approach to it, right? Because we often argue about the origins of a price movement. We try to discover them. We try to understand, and that's something that I truly appreciate. And I hope you don't mind me taking off the presentation for a little
Not
bit,
at all.
just to
Yeah, of
show
course.
off the very great, I think, case study, from one of the followers of yours, the way I understand it. Just quoting, it is only fitting on the last trading of the year that we all give it up for Alpha Trends. That is Brian Shannon, CMT, for writing the best trading book surely of 2023 and likely one of the best of 21st century, that is, and standing on the shoulders of giants. That's something that Jeff often comments on. Sure provides a beautiful view. Kudos. And I truly join on this. Congratulations, right? Because that was the very book that was the release, right, around the CMT symposium, wasn't it?
Yeah, yeah. You were there at the party. That's where
I
I first
was.
where I met you in person. Right.
I was, man. Those are very good memories. Those are very good memories. Congratulations to you. You deserve all the glory, my friend. And uh,
You
that's
know what I
awesome.
really like to see, Adrian, and in particular Greta here on the screen. She's made it her own. She has applied the principles and uses it in her trading each and every day. It's not about getting credit for it. It's about sharing it and letting other people see the truth of the market so they don't have to do dumb things with their money and just blindly buy the dip in what they think is a good company. If if the stock is 140 and it drops to 120 and you buy it, maybe it's still going to 90. I would rather buy it at 125 on the way up rather than buy it at 120 and watch it drop to 90. So it's all about that mindset of what is your risk tolerance and how do you make it your own. And Greta and so many people I've seen, yourself included, use the anchored VWAP to as an assistant tool. It's not the end all magic formula that's going to make nothing but profits for you, but instead it's a very valuable tool that shows with 100% certainty who's in control, buyers or sellers. And that's what it all comes down to, is supply and demand in the market and being on the right side of it.
Oh man, I love this summary. And just before I forget, I have a terrible squirrel memory. So let me rush and immediately encourage everybody to follow Brian Shannon CMT on Twitter, because there is the wealth of knowledge is one thing. It would be just understatement to refer just to this part alone. The books, the technical reviews, the short snippets, the videos, the chart analysis, um, the whole lots of wisdom that is coming from Brian Shannon, everybody, is cannot be understated. It's an incredible amount of work and decades of experience that, by the gray looks of Brian, I could never tell. There are so there's so many decades, if you will, because Brian's literally of I don't know, man. Like, what's the secret before we wrap the show? What's the secret of keeping the youth for such a long time? Tell me, man.
It's got to be genetics. I don't know.
Jesus Christ! I was trying to, like, literally. This is incredible. I literally thought you were in your 40s, like early 40s at best, max. No way. It's it's trading. It's trading. Must be trading.
Yeah.
Still, still, ladies and gentlemen, this is this is gonna be an excellent piece to wrap up the show. And before we go, though, Brian, to appreciate the wealth of knowledge that you shared and the time, the generosity that you have for our viewers, like right here for the National Podcast, is always giving the opportunity to leave everybody with just one golden tip, one takeaway that you'd love people to take out of this as a message, what's that going to be?
I think you hit on it, Adrian, is, know your time frame and manage risk appropriately.
Know your time frame and manage risk. Short, concise, to the point, accurate, and profitable. Ladies and gentlemen, that's been Brian Shannon, CMT at Alpha Trends, who's a trader, author, technical analysis using multiple time frames and latest releases as well, coming with so excellent opportunity to delve into Anchor Vwap's and to discover the profitability, because that's what it is about. And Brian is the best person to follow. So that being said, Brian, it's been an honor, dream come true. Since I've always admired you, I always looked up to you, to your works. I'm your cheerleader, man. What can I say? Thank you for that.
I'm a cheerleader for you as well, Adrian. So feeling is mutual, and keep doing the great work that you do as well. I learned a lot from your posts as well.
Oh man, thank you so much. I'll do my best. Now that I know that you're somehow paying attention, I'll need to get my shit together and just post better content right now from now on.
Keep doing what you do. It's great.
Oh man, thanks so much for your time, Brian. Ladies and gentlemen, it's been Adrian Zinchik, CMT, your host for today's Nest Show podcast, and let's roll on to the next one soon. God bless. Bye bye.